Now, geopolitics has evolved, right? Now it's a very segregated kind of a setup, right? Trades used to happen very easily, right? Now with tariffs coming in, I think India-US has been in particular importance because of the fact that China and India are considered to be the two countries probably would become the big superpower in the future, right? And then US would be challenged. And that's why the dollar dominance needs to remain for a country like US. And that is being challenged now. And with India-European deal coming up, I think that is the mother of all deals. I use a tool which probably helps me out, identify this.
How do you do it in yours? You use your own tool, something that you build proprietary for yourself?
Yes.
So Manish, again, thanks a lot for coming back on the podcast. I remember we did a podcast, I think few months ago. You were one of my first guests at that point when I was just starting off the podcast. And that did really well because I still remember at that point you had predicted that gold will go up almost 6 to 8 months ago because you knew that macroeconomics was not good. So now we're back again and a lot of things have happened since then. So I want to ask you this question. Right now, what is going on in the world with respect to macroeconomics?
Of course. And before we go there, thanks for inviting me again. I think it's a pleasure. It was a pleasure that time as well. And I remember you just took the SEBI license at that point in time.
I had not even started anything.
And you are on small case already and probably planning a PMS. So congratulations. And I think it's a very good start.
Thank you. Thank you, Manish.
Cool. Macroeconomics. I think that has been the talk of the town.
Yeah.
Right. Now, geopolitics has evolved, right? I think now it's a very, I would say, a segregated kind of a setup, right? So every country is now interested in their own. Earlier, what used to happen was trades used to happen very easily, right? So the trade, now with tariffs coming in, now everybody now looks at their own priorities, right? And they're casting their own FTAs, free trade agreements across, right? Left, right, center. I think India-US has been in particular importance because of the fact that China and India are considered to be the two countries probably would become the big superpower in the future, right?
Yeah.
And that we have to see. And then US would be challenged by these two countries. And that's why the dollar dominance needs to remain for a country like US. And that is being challenged now. And with US debt at such a high level and such a and the interest rates not coming down anymore. Now that the Fed chair has changed, probably those things would start happening. But that's a lot complex piece which US Fed and along with their fiscal policy need to solve, which is their interest rates, etc. Right? But what they have done is they found a short-term solution of putting trade tariff and so that it addresses some of their fiscal worries. Trade deficit in particular, right? It works in the short run, but it doesn't work in the long run because long run, other countries will look for other options. And with India-European deal coming up, I think that is the mother of all deals. If you look at it, it will increase FDIs. It pitches India as the China plus one, which is like if somebody don't want to do it in China, they go to India.
Not any other country.
Yes. So that is, I think, among the three things which have happened recently, right? US-India trade deal. Probably it's more optics, less of an impact. The market showed a little bit of it, but then it is back again. You know how it behaves, right? It has been volatile. But the Euro-India deal is much bigger. And I think the budget had no freebies. It had fiscal consolidation. It talked about keeping the fiscal deficit at a very low level. I think it is a very proactive budget. I think not a populist budget. So market only reacted to the options trading SCT going up. Nothing other than that, right? Otherwise, it was all okay, right? That's how I see it. So that's how I see the broader picture shaping up for India.
So do you think actually it was in hindsight a good thing that US did all this tariff nonsense because now India gets a good benefit with EU, which had not been signed before?
I think these things evolve, right? Initially, US had put zero tariff on India. But all the tariff on China. At that point in time, it sounded so good. But then it is a lot of things are political as well. And that's where it becomes a little, so trade policies are put by governments. But they have political agenda behind it, right? So I don't believe that this happening resulted in this kind of setup. Rather, India being able to play their cards really well.
Yeah.
So they fought hard with US. It delayed the deal signing, but at least they safeguarded the agriculture sector, which they wanted to do, right?
Yeah.
But at the same time, it's talk around $500 billion of buying, right, in the next 3 years, 5 years, right?
5 years.
Now, if you look at that, I think we really want a common press statement coming from both, because both parties are saying this as their win.
They want to show it as
Yeah.
a win to the country.
But actually, we need to, is it a win-win or is it a win-lose? I think we need to see that.
That's not played out yet.
No. And India, Europe is a win-win.
Pure win-win.
Yes. That's the difference.
Got it. And obviously, I think Indian investors more likely has got battered in this last 14-15 months. One, we had the small cap overvaluation, FIS went out, and FIS was a very big topic in this whole thing, right? And we saw some sliver of FIS coming back. But do you think now, because you've seen so many cycles, you've been in this industry for so long, do you think now the worst is behind us and we will gradually go up? I'm not saying V curve kind of a thing, but do you think now the worst is behind us and we can expect a good run?
Yes. What I see is, and having seen so many cycles, what we see is if there is 1 or 2 years of sluggishness in the market for various reasons, it usually catches up. What that means is the 15% CAGR.
The law of averages.
Yeah, law of average. It will come up. The only thing is, are our broader fiscal policies and monetary policies aligned with country's growth?
Yeah.
So the pie needs to increase, which means the GDP needs to grow.
Correct.
And that's growing at 6-7%, which is fair. But I think if we really want to talk about Viksit Bharat, it has to grow at 9%. Now, for that, there is a lot of capex which needs to happen. There's a lot of India also needs to come out as a leader in some area. Like China is a leader in some area, right? Manufacturing, right? US is with the tech part, right? With AI, they are leading, right?
Yeah.
What is India? What is India's edge?
Apart from IT service.
Yes. And I think in the next 2 to 3 years, India needs to find their edge for them to move at a 9% or a 10% GDP growth.
Very, very true, actually, because I think this is the first time we were also challenged on the global scale saying, what is your kami and what is your weakness and strengths? Very interesting. Now, I want to come to the investor standpoint because I know a lot of people watch this. They're all smart audience. But I also know that they've got battered in their portfolio. Many of them. I would say at least 8 out of 10 would have had a red portfolio as of now. So from an investment standpoint, how would one align their portfolio now and maybe in the future?
Very good point. I think anybody who had 15-20% gold in their portfolio as a hedge, which we suggested at that point in time, like 6-7 months back, would have at least be on the positive side.
Correct.
Now, for sure. Gold and silver has been a little volatile of late, but anything which is running up like 60-70% or 100% in a year will be volatile for some time, right? And I think this is just geopolitical things settling down, right? And also the price also, and there are a lot of things which happened around that, right?
Yeah.
At this point in time, investor, I think they still need to hold that gold to that level. It can be volatile, but it will at least safeguard you against any of the geopolitical things which come up.
So you're still bullish on gold for a longer time frame?
I think I'm not bullish on gold. I consider it as a safe asset. Hedge.
So it should be in your portfolio?
It should be in our portfolio for, I would say, till Trump is in power. But probably I would say it should be in our portfolio. The percentage can change.
Okay.
Now, there was a point I say 20% allocation. So if it goes above 20, you need to sell that and buy equity.
So keep it at
15-20%. If it goes below, if it goes down, you have to buy more.
Correct.
I think that works pretty well in the long run, right?
Yeah.
That's how I see it. But for India, I think with all this FTA signing, the budget coming, the US trade deal, I think I'm very bullish now. Bullish, short-term volatility will be there. But there are few sectors which will shape. And we need to identify those sectors and invest in those sectors, right?
Okay.
Now, these are very capex heavy infra. I think textile would get a boost as well with the things coming in. Euro FTA, I think that would also have a lot of FDI coming in certain areas. I think those areas will get benefited as well. So I think I use a tool which probably helps me out identify this.
Okay. So how do you do it in yours? You use your own tool, something that you build proprietary for yourself?
Yes.
Can we see that? Or can we go through it and play around with it?
Yeah, of course.
Mainly on the lines of, if I'm an investor, and obviously there's so much information coming to me from all sides. Okay. EU, US, macro, 100 things are coming, I'm confused. If I want to build something like a portfolio, how would I do it? Can we look at it from that perspective?
Yeah, of course.
Okay, let's get the laptop also.
Yeah. So this is our AI-powered investment co-pilot.
Okay.
So this is what we use. So this tool, I've been using it at the back end, right? And my team, as it expanded, they wanted this tool as well. So we actually came out with this, where you ask simple questions and it gets you more insights. It uses our quant layers behind the scene.
Okay.
So which I will explain and you will understand.
So is this, again, is this proprietary private for you, or have you opened it for people? Because last time I remember you had not opened it for people.
We opened it only recently.
Okay.
That's because we were getting a lot of do-it-yourself kind of audience
Okay.
who wanted to build their own strategies. And the idea was, can we give it something to them? While we are giving it to our internal research team, can we build something? So make it a lot more user-friendly, right? Okay. And also it's like I will show you the features.
Yeah.
And if you look at the features, what you do is you can ask in plain English.
Okay.
Now, asking questions like find high dividend, low volatility stocks, or build me a defensive strategy for current market condition, right? Just like this. And then it gives you a start to it. Now, what AI does is it builds a logic behind the scene. So if you say, I want to pick value stocks, then it looks at parameters like price to earning ratio, it looks at ROE, etc., right? And then has those filters applied and tries to get you a basket immediately, right? Okay. So you can validate the data, and you can look at it, you can analyze, you can look at all the drawdowns.
Achha, it does backtesting also.
Yes.
Oh wow, okay, that is very interesting.
And finally, you can create a strategy. You can do paper trading, and actually you can go live as well. So you can link it with your broker, and actually you can execute.
Okay, can we go into this? I'm interested now because I want to see some data as well.
Yeah.
So Manish, this is the interface, right?
Yeah.
So this is where your co-pilot thing comes in. But what can we do here?
So you can start with a stock specific analysis. You can do sectoral analysis. You can do comparison of stocks, which one to buy, which one. So if you have a doubt about which one should I buy among these two,
okay,
you want to do that comparison. It gives you a very good insights. Exactly tells you what is good for what and if we have given a positive rating for one and negative for the other, why is it so as well. I think the most powerful part is the screener, which probably helps you screen stocks based on very open-ended questions, right? Can you create a dividend-paying strategy for me? Can you create a defensive strategy for me? Can you create a strategy for current market condition?
Okay.
What it does is it looks at the market condition, it looks at all the data, and then creates one for you.
So can we do like a top-down approach?
Yes.
Where, let's say, I'll give you an example. Let's say I am a guy who wants to invest in the market. Abhi to itna macroeconomics has become so weird. I want to create a good defensible basket. Defensible means I don't want it to be too aggressive, not too bad also. A good defensible basket for the next 2 to 3 years. Can we start going from that perspective?
Yes.
So how would it work?
So let's say it's a defensive strategy, right?
Yeah.
That's what you were saying.
It can be quality, value, deep value, defensive.
Yeah. Let's start.
Low volatility.
Yeah.
Things like that.
So let's say I say build a value investing strategy for me.
That's fine.
Now, as soon as I say to it that it's a value investing, it knows which parameters to look at.
You have put the parameters in the backend?
Yes. So we have done a lot of simulation, historical simulation, where we have varied all the parameters, right? There are around 120 parameters which you can use to create a strategy, actually.
Okay.
Now, some of them are important, some of them are not. Some of them are at aggregate level. So what aggregate level means is you have a stock fundamental quality, which looks at all the quality parameters and give it one rating. But at the same time, you have price to earning ratio also, you have ROE also, you have PAT growth also, you have EBITDA margin also. So all of those parameters are there. So it has got fundamental, it has got technical, it has got sectoral, it has got predictions also. So coming back to, I asked her it build a value investing strategy. So what it says is, value investing strategy aims at identifying fundamentally strong companies trading at reasonable valuation within the Nifty 500 universe. Now, you can always say, I don't want to use Nifty 500. I can use something else, which means you can give a market cap range as well.
Okay.
So I will show you with some examples. So it says price to earning less than 15, price to book value less than 3, return on equity greater than 15%, and total debt to equity less than 1.
Oh, it'll give nice stocks. Okay.
And once it runs it, it does it for a default 10 stocks, which you can change.
Okay.
It does it for a duration of 12 months.
Okay.
You can certainly change. Yes.
Okay.
Quarterly rebalancing. It does not use any hedge its strategy style, it has given a name. It is initial investment was 10 lakhs, right? 10 stocks. So it is 13 lakhs now, 31% CAGR. You had bought 22 stocks and sold 12 of them in the last 1 year. Okay. Now it gives you exactly which stocks were picked up, what price they were picked up, and when they were bought and sold.
Okay.
And it also gives you a little bit about, is there a concentration risk? What about the turnover? So it says it has got a very healthy CAGR right now, right? And many of the current holdings are from cyclical industries, which can perform well during economic upswings.
Yeah.
So it gives you a very good insight. Now if I say, can you run it
like for today or something like that?
For 3 years.
Huh.
So what it does is, I think the spelling has gone a bit wrong, but I hope it is intelligent enough to understand that I'm asking, can you run it for 3 years? What it would do is now run it for 3 years with quarterly rebalancing, exactly the same scenario. I could say, I want to make a 20 stock basket. It will change it to 20 and then simulate again.
So I have
with the same parameter.
I have a question here. So from what I saw, if you can scroll up a little bit, very interesting, because it had low P, low price to book.
Yes.
So basically, it took a lot of very good contra picks, and if you see the companies that were there in the bottom, it had all the companies that were like forgotten heroes, but then the momentum kicked in and they actually did well, right? That is what it. How did it? How does it know how to pick these as the top 10? How did it rank these as the top 10? I'm sure there would have been 100 stocks.
So you can sort. So if let's say some stocks meets a criteria, this is a criteria which we have used, right? So few stocks will meet these criterias.
Correct.
Now you can rank them.
Correct.
Either which is proprietary to us, which is our quality parameter.
Correct.
Or I can rank it on market cap.
Because you have ranked these stocks in the bracket somehow.
It's a market cap ranking, right? So you pick higher market cap first. Simple. It makes life a lot simpler for the user to understand as well.
Okay.
And you can do is,
very interesting.
You can tell it now and say, can you suggest improvement on this strategy? So it will change these parameters and try to find stocks, right? Now, it might not give CAGR right now. So it might not give a 31% CAGR right now. It might give less.
Yeah.
But over a longer duration, it performs much better. So because it has got all that historical sense as well, I will show you something very interesting. If I were to look at...
Can we go down and see what answer it...
questions it is asking, right?
You had asked some questions.
Can you run it for 3 years, right? So it ran for 3 years, 36 months. And if you look at it, the CAGR is 25%. The return is 99%. You have bought 47 and sold 37. And now you know that ONGC was the hero, Petronet, LNG, General Insurance Corporate, 30%. And there it will show you the negative performance as well, right? It gives you a huge tool. It's a huge tool in a way where you can play around and come to a strategy which fits your risk profile. I will show you something which is around, people are asking, right, what will work now, right? What has worked till now? What will work till now?
Correct.
Right? All those things, the company is, if you look at this thing, right, get all the supported list of parameters, right? I'm not able to click it, but it does, right? So it says, so these are some of my queries I have run.
You can run us through this.
Yeah.
What you did.
Some of these things, right? So I will go to the top, right? So can you list down all stocks and dividend theme? So if let's say you are looking for a dividend thing, there are a lot of themes which are already pre-built.
Correct.
So you can ask, what are the themes which are supported? So it will give you a list of themes which are supported, right? So it says these are the stocks which are within the dividend theme. You can build a strategy on top of it as well. Also, if you have already invested through us, you will get all the details of your portfolios in this screen as well.
Yeah.
So it's like, it is a good interface for the user to actually look at their portfolio on the fly, right? And this is something which I did. But actually, I really wanted to show you something very interesting. So if you look at this, right, this is very interesting, where I was trying to create a momentum strategy, right? Now, what I did was, I created a momentum strategy. Now, what parameter did it look at? It looked at 3 months return greater than 5% and stock fundamental quality greater than 0.5.
Okay.
So it's a range between 0 to 1, right, which we have. So the 1 year return was just 4.5%. So momentum strategy hasn't done well.
Yeah.
We know this, right?
Yeah.
For a 3 year period, the momentum strategy gave a 23% CAGR. The same strategy, right? And for a 5 year period, it gave a 20% CAGR.
Crazy.
So momentum, you can just say, can you build a momentum strategy for me? It will be able to do parameter, but you can always say, I want to use ADX. So it will then come and say ADX greater than 30.
So let me get this straight. I'm just thinking, like, if I use this versus, let's say, use Claude or this one. So you have already fed all this historical data inside. That is why it has that history.
Yes.
Whereas if I go tell Claude build a strategy, it does not have the data of, let's say, last 5 years or last 7 years or last 10 years. You've also put price data and you've mapped some certain parameters in the backend according to your expertise, which you have built over so many periods of time. And you can ask it, build a defensible basket, value basket, long-term basket, momentum basket, 15 stocks, 20 stocks with hedge of gold at 10%. So it'll take those parameters and build something.
Exactly. And I will tell you the power of it. So now this is where I have created a multi-factor strategy. So I said, can you build a multi-factor strategy for me? Then it asked me, which factors do you want to combine?
Correct.
Is value, growth, momentum, quality, what do you want to combine? So I said, can you combine growth, value, and momentum, right, for this? Again, I simulated. If you look at the CAGR, it has given a 52% this year. For
like
10
1 year.
stocks. Yes. And 35% over a period of 3 years and 24% over a period of 5 years.
Very interesting. Okay.
I showed you this, right? And I showed you the value investing as well, is it? No,
value. We did the first value example.
Yeah. I think it is now I will just show you this one. Now, this is very interesting where if you look at this, it's a growth strategy, total growth. So what is it looking at? Net sales growth, PAT growth, reported EPS growth,
Correct.
return on equity, return on capital employed, and normal fundamental quality of the stock. So it is a lot of parameters which are getting filtered, right?
Correct.
And if you look at this, and these numbers you can change actually. So it uses some defaults, right?
You have said.
Yes. Growth did a 12.5% return this year, 22% CAGR in the last 3 years, and in the 5 years, it is 12.5 only.
Got it.
It doesn't mean growth is bad. What that means is,
this strategy is
with volatility and with everything kicking in, I think it was not able to perform that well. Now we can always look at the stocks which were there, which were picked up, and you can justify whether that made sense or not, right?
Yeah.
So it will give you all this. So you see Hindustan Zinc, Bajaj Finserv, G Vernova, all of these, Kotak Mahindra, BSE Limited, very good growth picks, right? Very good growth picks. So you do growth, you grow, you do value. It gives you the flexibility to design your own. So if I say my multi-factor is a combination of value, growth, momentum, and quality also. 4. What does a CAGR look like? And can I extend it to 20 stock basket? Can I run it with, instead of quarterly, can I run it with a monthly rebalancing? Does it change the performance as well?
Okay.
So all in all, I think we started with the message about what should the investors do now.
Yeah. So
right?
how, if I had to do one today, I'll give you examples and you tell me from your knowledge what would be the best case. I'm an investor. I don't have that level of risk tolerance. I'm medium, put it that way. And I'm looking at a long-term 3-year basket. What are the different factors you would want me to use?
Okay.
Let's say quarterly rebalancing is okay.
Quarterly rebalancing is okay. Now, as soon as you say quarterly, it becomes a more fundamental kind of.
Yes, I want little stability-based basket.
Stability.
So what are the parameters I would use? Was it value, factor, or this? What would you tell me?
I would say go for multi-factor.
Multi-factor. What would I put there?
I think growth hasn't done well.
So
momentum hasn't done well.
Correct.
What has done well is value. So all these metal stocks, everything were very cheap.
Yes, single digit Ps,
right? So you combine these and run it across. I think it will give you, on paper at least, it will give you 25% CAGR.
Beautiful. That's enough.
That's enough for sure. Everybody, I think it's enough. I think it gives you the power, but I think it's the discipline which you need to follow. So when it says sell, you need to sell.
Yeah, it might have drawdowns also, but you stick to the plan.
Exactly. I think drawdown analysis is very important for any strategy, and you can do that as well.
This also has.
So you can run it across. So once you save it down, so let's say I save one strategy down, it then does a lot more detailed analysis of that strategy.
So it gives me like an equity curve of how it is.
Yes, how the performance would have been, what would have been the maximum drawdowns, all the details will come in.
Beautiful.
And then you can actually decide, I want to go live with this. You can do paper trading from here.
Okay.
So you can say, I want to test it out. So I had some of these strategies, right? Which like this 20 large cap value picks, right? I created. So if you click on this, so these are my live strategies, right? So what it does is it gets me the live status of this strategy.
Like as of today.
As of now. and it tells me which stocks are there, how are they doing, what has been the 3-month return, what has been the, like, you can do more to it. Drawdowns as well. Finally, if you really want to go and execute it with a broker, you can go on the app. So everything what you do here becomes available on the app.
Got it.
Automatically.
Got it.
So you create a strategy, you build a strategy. See, this strategy.
So 20 stock basket as of today.
Yes.
Investment range is 1,95,000. Initial investment, let's say it's 20 lakhs. The PNL is 26%.
Yes.
Today's PNL is minus 32,000.
So
That's fine.
Yeah, it is. Today's PNL is minus 1.28%.
That's fine.
That's what, right? And these are the stocks which you have top 5 gainers, top 5 3 laggards. You can have more details. You can always ask it, can I have the PNL graph for it? Whatever, right?
Correct.
All those things it will give you, right? So this is how you can use this tool. And this is how my team does it as well, I think. And it comes out pretty, you learn as well. I think you really need to learn investing. You need to try paper trading, paper investing, I would say. And then once you are comfortable, then you go and start investing, right?
Does it also do stock analysis? Let's say I want to do comparison or stock analysis. I found 2 companies I want to check, or even 1 company. I'm sure you would have built something in the back end to make it ready already. So I don't have to think about, ye is pe parameter pe judge karo, is pe judge karo. So you would have built something, right?
So I'm just showing you a comparative analysis of TCS and Infi right now.
Okay.
So I just chose this.
So the template is built by you in the back end.
So template, I would say I have fed it all the parameters it needs to look at. Template, how the comparison needs to happen. Yes, that is defined. Yeah. So you define those templates so that we are in a very regulated space. So SEBI has the guidelines around RA model, right?
No buy sell.
No buy sell. So even if you can give a buy weightage to it. You can say, but you still say overweight, underweight, right? And you say that, right? Now, if you look at this, right?
No, the reason why I'm asking is because if I go, let's say, to a simple chat GPT kind of interface and say, do comparative analysis, it'll ask me 10 questions.
Exactly.
So that is why I'm trying to understand, does your thing in the back end, you have already set the parameters, so I don't have to put those extra stuff?
Exactly. So,
okay, like this.
Yeah. So something like this, right? So if you do TCS versus Infi, right? I will show you how much detail it goes into. And I think that would be the biggest thing to look at, right? So if you look at its performance summary, right? So this is a percentage change, high price, low price. This is normal price comparison, fundamentals. So it says TCS is fundamentally positive, but Infosys is neutral. Now it looks at all the parameters, earning per share, EBITDA margin. Now the 1 means it's a positive signal, 0 means it's a neutral signal.
Got it.
Right? But I think it you can decode it, but it also explains it later on. Technical analysis looks at all the technical indicators, most important one, and where you can compare actually. If you look at it technically, Infi is bullish, right? But fundamentally,
it's not great.
Yeah. If you look at our IntelliSignal, which is more like technical, it says Infi is buy, right? There is forecasted price as well, which is our AI-based pricing predictions as to where the price would go in the future. It tells about the accuracy of our pricing as well. Recent news. And finally, I think the most important part would be for fundamentally focused investor, TCS might be more appealing due to the robust financial performance. For those considering overall signal and potential technical recovery, Infosys might be an option. But with caution due to recent volatility. Yeah. It is always recommended to consult a financial advisor. So it gives you that enough detailed analysis. And I think I was showing you some strategy, right?
So the bot time laga hoga na, because in the back end you're sitting and building all these frameworks, basically I would call it, for the AI to absorb and learn according to the framework. And then so much price data you've fed into it as well.
Yeah, I think, while LLMs has come and made interaction easy, still the value lies in lot of the things which we have learned. Quant models. That thing, the person who has built it only understands it, right? And I think that's where the value comes in, right? So GenAI reduces that burden of explaining, burden of interfacing, right? But the real value comes when you build a vertical AI on top of it, which is like, I will master finance domain.
That's only possible if you know what you're asking.
Yes. If you look at this, right? Anything which you see on the right hand side, right? If it is blue, it is clickable. If you click on it, you get a very detailed analysis for a stock level or industry level, and it will explain you each and every parameter, what it means, and the key takeaways at the end. So you can decide whether you want to.
This is like a personal finance bot you've made already for. Like a custom bot.
Custom bot, exactly. uh, tried to build something, and I think it has come out really well. The team is loving it, and
it's crazy. So you actually build this for your own self internally for your quant baskets, and then it's built into such a. So this becomes better over time, obviously. Like any.
That's the best part to it. So once you start interacting with it, it understands your profile, it understands what you have done, it becomes smarter. At the same time, the more simulations you do, it also gets stored, saved, and it becomes a feedback loop into your decision making. So if you ran, let's say you ran 5-year simulations, right, of some stocks, you create a strategy, saved it down. Someday you can say, get me all the strategies. What you have learned so much, right? Can you tell me which will do well in the future? So I think it will get smarter. I think that's what we really want to build, which means an AI which empowers the investor in the right way, which means give them, it just doesn't give them directions what to do, but rather explains it. So the explainability part.
Correct.
That's where the.
No, I like this because it's very structured. Like even for me, I mean, I would use something like this rather than a plain vanilla bot only because it's structured. I don't have to ask too many questions. There I'll waste 10 minutes asking questions, right? Now, for example, in my head, I want to like build, let's say, a flexi cap basket for myself. And I have my own basic parameters. I want gold as a hedge. I want like a 15 stock basket. I want little bit of value, but little bit of momentum. Or if I want to play small mid with deep value and momentum, that would be crazy to play.
Actually can do whatever you are saying.
I want to
you
test
can
that.
do it. Yes, you can do exactly.
So it is open to interpretation. आपको कैसा चाहिए आप करो, आप खेलो.
Yes.
मतलब you can figure it out.
And we will guide you in the right direction. So when you say, can you help me improve this? That's where we leverage a lot of learning which we have done, right? A lot of simulations which we have done from history, from everything, right? And say, if you change this parameter to these values, you would probably make this strategy more robust.
Interesting.
So I think you can exactly do that.
Okay.
Yeah.
So now I have some more questions on, let's say, quant, because now I'm very interested in looking at this. In the industry, are many people, when they say I'm a quant firm, what do they actually mean when they say I'm a quant firm? Like just for the users to understand quant, because everyone says quant is scary and quant is quant. What is it? Like you have explained something here, but what is exactly quant when someone says I'm a quant firm?
See, if somebody says I'm a quant firm, right? See, quant, if you look at, right, if people are basing their investment decisions on data,
on numbers,
okay. And number has to be objective. As soon as subjectivity comes in, it is no more quant.
True.
So if the number flips from this to this, I will sell this. The quant strategy says so, and you do it. I will say anybody who follows some rules. So it can be as simple as moving average crossing, and the person does it as it. I will call it a quant strategy. I say as simple as that. But you can make very complex quant strategies, right? So you can. So we leave out the intraday part. We are the investor community, right?
Yeah.
So we talk about. So for us, what is quant? So multi-factor becomes quant, right? I think a lot of macroeconomic analysis, so lot of data which comes along, right? Then you are able to decide what the asset allocation should look like. So which parameter? So now you look at interest rates, you look at oil prices, you look at dollar, and all those parameters also change, right? And based on that, and you have done some backtesting. So quant also is very important because you need to do the backtesting piece. So you have a hypothesis that multi-factor works. Growth, if I say combined growth, value, momentum, it will work and it will give me on an average CAGR of 25%. Let's
correct.
If you have a hypothesis, you have to backtest it to prove it.
Yeah.
It works on 10 stock basket. It might not work on 25 stock basket, but then so all those things need to be done. So quant strategies are backed by data, hypothesis, backtesting. So it all goes in there.
So that means it's also very variable because you might have X data that you are looking at. I am looking at different type of data, and there's insane amount of data in the world right now. Oh, very interesting. That's why quant is so competitive.
No, exactly. Okay. And it is all about alpha generation, right? And that's why backtesting doesn't give you the guarantee that it will reflect in the future.
Because future might be
something else. The parameters might change, right?
Scary.
Yeah, that's the scary part. And
so if I had to ask you today, with all the different factors we have, if you had to align a basket for yourself today, your own personal investment portfolio, looking at all the macroeconomics that you've seen, which is crazy, what are the factors you would use and how many would you use in your personal basket? How would you do it?
if I were to do it, and since I have this tool handy,
Yes.
right? So I will ask it, can you design a strategy which is suited for current market conditions?
Oh, it knows the current market conditions.
It will go and get the market condition. It will take time. So these are very heavy queries you make.
Correct.
Let it run at its pace, right? Because it does all that, right? So I will ask it. And I've already done it. So I've done it. And then what it has said is probably growth hasn't worked off late.
Because we're not seeing only.
Yes. Momentum hasn't worked. You should go heavy on growth and momentum. Now, this is again, I don't know whether it would work 100% or not, but quality is at the backdrop any which way. So quality we need to have, right? Metal space has been overpriced now. I think it is very volatile. It is not suited to a portfolio with a higher allocation more than 10%. Metals means all this metal stocks as well.
Yeah.
I'm just saying that, right? Even gold, silver is suddenly it's a meme of gold, right? It's so volatile, right? And it goes heavy, right? So gold is a good hedge, and we should have it, and we should have it for long. So if I look at it, current market condition, growth, momentum, quality backing it, gold as a hedge with 20% allocation makes me a good strategy with a target of 25% CAGR in the next 2 to 3 years. That's what I would suggest.
Wow. And this is for, let's say, a quant factor based. Now, if I'm a guy who doesn't understand quant or factor, I'm a long-term investor. मेरे को 5 साल का investment horizon I have. I want good, fundamentally strong companies. How would that happen with this tool?
So you have to ask fundamentally good companies. Now, the point is sectoral. You can pick based on sectorals as well.
So that's
capital goods.
Fundamental also, if you break down, it's what growth and quality, right? Technically. Or is it more growth and value?
It's more. So fundamental, if you look at, it's first of all, you need to have the profitability. So
Correct.
Profitability. So all these margins.
Correct.
Right. Then this is quality, which is this return on equity. Right. Then comes valuation, which is price to earning ratio, etc., etc. Then comes the growth, which is PAT growth, EBITDA growth, EPS growth, right? All those parameters come in growth. Then there is financial stability. As well, right? So stability as well. So what is about debt to equity ratio? What is about debt servicing cost? So fundamental is 5-6.
Correct.
Combination.
Correct.
Does all make sense? Some will make sense in different industries. And that's why we aggregated at a one level. Because we really want to aggregate and see, we can see something happening, right? So stock fundamental quality, it looks at 80 plus parameters to decide whether it should be 0.6 or 0.7 or 0.8.
Yeah.
Then you say, I want fundamentally good stocks with greater than 0.6. You have to test it, try it. So you say, I put 0.7, but only 2 stocks get picked, which means I'm not able to find good stocks, fundamentally good stocks right now. So you make it 0.6. Or even ask it, can you keep reducing the parameter till you find the perfect fit? Or at least you pick at least 10 stocks. So it will keep on running and find you that.
So I can actually find a long-term basket, you're saying. Like there's like a 3-year basket, 5-year basket to play around.
So I think for a person who doesn't understand quant, I would say he should go for good quality fundamental stocks, right? And not go into individual about what's growth is, So
finally, good quality fundamental stocks that I can hold for 3 to 5 years.
And probably you say, I want to add momentum as well, because momentum is gaining now.
Yeah.
So if you say now that the 5-day moving average is, current price is greater than the 5-day moving average, right? Which means it has gained momentum in the last 5 days.
Correct.
If you say 20 days, right, then it has gained momentum in the last 20 days. Correct. That's what it means, right?
Correct.
So if I put that filter as well, so I'm just picking the right stocks who are in good positive momentum as well with good quality. So I reduce my drawdowns.
Correct. Very interesting. Very interesting. Okay. So now I have one last question to you. Looking at the future now, let's say, because last time you made a very good prediction as well. So looking at the future in the next, let's say not too far away, let's say 2 to 3 years, what do you think will happen? Like 1 or 2 sectors that you feel will do well in India, someone should look at because of the backdrop of these deals. What do you think in your head?
See, it is going to be volatile.
Still.
No matter what. So volatility is not negative. Volatility is the price you pay to earn a CAGR of 25%. Otherwise, you go for 7% FD.
Okay.
But if you really want to earn a 15-20% CAGR, you take risk, and that's the volatility cost, right?
Yeah.
Last 2 years have not been good broadly. What that means is It's going to be good from at least it cannot get worse. So the downside risk is very less.
No.
No.
Okay.
So downside is not there.
Right.
I don't see it unless and until geopolitical something happens, right? So downside is not there. So what do you ride on? Is it some sectors do I ride on, or I go broader market? I think since broader market hasn't done well, I think going broader market, I was looking at what industries would be impacted with this Euro-US trade deal. I got actually 15 industries which were positively impacted.
Oh, wow. Okay.
And now these are capex, defense, auto, finance as such, right? And then, so there's a lot of them. So there are around 45 industries which we track, right? So out of that, 15 were looking good. And so I think so 15 is like broad market. I will not cut because 80% of the market cap will be within that 15 industries itself, right? Maybe even more.
Correct.
So you should go broad market. So that you reduce the downside. So if you go industry specific and something wrong happens, and with this geopolitical thing, something wrong can happen. Now, Anthropic AI stuff came.
Correct.
All IT sector stocks went down, right?
Correct.
Now, if you were very heavy because IT hadn't performed, you say I go long on IT,
Downside
but it
risk
was
is zero.
downside. So you should not have that idiosyncratic risk, which is like concentration risk in your portfolio.
So 10-15% per sector max.
Max.
That is gold at 10-15% also.
You can go to 20 also. So with finance, with auto, with these sectors are big sectors.
So have multi-sector approach with a 10-15% max allocation in each sector. You'll be fine.
Would be fine. And with gold as a hedge, I told you, that's a given. No, you don't think that it is now very high. Its price is decided by what's happening outside, right?
Yeah, nothing
so
to do with
nothing to do. There is no intrinsic value to it, I tell you.
Yeah.
So its price is like fear. The fear goes high, the gold goes up, right? And it's a good hedge with equity.
Yeah.
Equity is like a risky asset. Gold is a defensive asset. But gold has given good return. It might not perform. So, but then your 20% portfolio might not perform, but equity 80% will perform.
Yeah. So you're balancing it.
You are balancing it. But for downside risk, when the equity goes down by 5%, then gold goes up by 2%. It still covers up your portfolio quite well.
And what's your take on silver? Because now a lot of people are talking about it. I want to understand your take. I can tell you my take also, but I want to know your take.
I would like to hear your as well. I think you are a very good researcher.
So I like gold and equity, honestly, little old school traditional, because I've seen the graph of silver. It is not a smooth equity curve. It has these spikes and it has these downturns for years and years, and then again it goes up, again it comes down. When the narrative is good, everything is usually assumed good. Industrial use case hai, ye hai, wo hai. वो तो gold के लिए भी जब भी narrative अच्छा होता है, everything is nice. And when it falls, the narrative suddenly becomes opposite also. I don't know, if you ask me, given a choice, you have 1 lakh rupees, where would you buy gold or silver or 50-50? I would only go still gold. I would not go silver. That's my take. But what do you think is happening? Because today everyone is asking these questions only: gold, silver.
See, I always look at these two as hedges, not speculative stuff, right? Silver can still be bet on the industrial demand it has and the supply crunch. So it is always a byproduct. It is not mined. So it is a byproduct of mining, right?
Correct.
So its supply is fixed, but the demand is increasing with all the stuff happening around solar energy, renewables, right? EVs as well, right? So the demand is high. So, but then there is always a cap to it, right? But it is so volatile. Yeah. I really would like to bet only my 2% of my portfolio on it.
Because it's so volatile.
Yes. I can put 20% in gold, but I cannot put more than 2 to 3% in silver.
The people are doing opposite right now.
So that's the mass, right? I think, I don't know if they are doing it, but if you look at the volatility, it is no more a hedge product. It is a very speculative product. Let's not go there. I would say if we are managing wealth for the others,
yes,
we should reduce the downside risk. Yeah. And we have to be explainable as well.
Correct.
You cannot, so you can make a high risk strategy and you can say, give it to a high risk guy, right? We have a lot of high risk strategy. At one point in time, we thought we will switch gold with silver.
I was thinking about it only.
And I did that. I asked to all the subscribers, right? And only 2, everybody said yes. And only 2 said, who is responsible for the downside?
Oh.
And because of those 2 people, I didn't do it. Yeah. And the idea was, and that is where what I learned from there. And nobody's complained to me that because had we gone, it went very up, very high. Since then, it was like 150. The gold, it's the silver ETF was 150. It went to 350. Now it is at 230, 240, right? Something like that. It would have given a much higher return than gold, right?
Yeah.
But we didn't do it.
The volatility was
crazy. the portfolio looks like it's like deep red, deep green. Oh, I don't know what it's happening. Its explainability goes away, right?
Oh, but that's very interesting. But again, I think that answers most of the questions, because I think a lot of people have that doubt: silver, gold, and there is more confusion, and it's become speculative, as you said, rather than a hedge. So demand supply gap, eventually that gap will go away, and then things will go back to normal. Same with gold also. Right now, it is a cause and effect is playing out with gold as well. But I think right now what you said is we are in that point where downside risk is minimal and we can now start going well. And to summarize also, you said that two factors, growth and momentum, which have been forgotten, might do a comeback in the next few years. That is something we're looking at. So great. I think, Manish, thanks a lot for this. And I really love that tool. So I want some access to it. I will use it today because I have some ideas to test now. But even for the audience, let's, if possible, give like a freemium version. If
we will certainly give to your audience. So for people who come through this podcast, we'll certainly get a good.
Chalo, done. We can get some knowledge from that as well. Okay. Wonderful. Thank you, Manish. Thank you again for coming for this podcast and really appreciate it.
Same, yeah. And it's always a pleasure talking to you. Coming down to Bangalore, it's nice. Yeah. Just coming from airport to here is a bit of a challenge. Otherwise, it's an awesome place. I love this.
Super.
And really good.
Thank you.